Hello and welcome to another episode of Financial Markets Insights. We're delighted to have Richard Baker of Tokenovate back again. Welcome, Richard.
Thanks, David. Good to join you again.
This time we're going to talk about a subject which Richard has really been my mentor in. That might be overstating my knowledge because actually carbon credits, and particularly voluntary carbon credits, which I learned about at a recent Tokenovate roundtable in the city, are a whole new world to me. By the way, the events that Tokenovate operate in the city, they're invitation only, and if you can get yourself an invite, I very much suggest you attend. What I learned there in a very short amount of time was just how little I knew about this space. Trading carbon credits might be something I could understand, but get a handle on the sector's historical and future structure and where the industry might be heading next was an absolute revelation. So, Richard, can you start us off nice and easily by explaining why Tokenovate is in this market?
Definitely, yeah. Really looking forward to navigating this conversation with you, David. Yeah, I feel out of everything that we work on in Tokenovate that spending our time on the world of voluntary carbon credits is a very noble use of time. So I guess firstly, we got involved with this a little bit late to client demand. We ended up working with some project owners and mainly a new emerging carbon marketplace during 2023 that took us into this market in a major way. But I think as we dipped our toe in early 23, we really kind of discovered some significant structural problems. And so that prompted our thinking caps on and, really look at it through the lens of how would we create a kind of an end-to-end workflow to make, the connection of a seller and a buyer much more standardized and a lot more tangible. And at its heart, that's what we are trying to do. But maybe let me unpick that for a second. What's going on with the voluntary carbon market today? Well, firstly, it is an unregulated emerging asset class. I think it is destined to be regulated in the next 2 to 3 years, and we'll come to that in a little while. But effectively, voluntary carbon markets have emerged out of the Paris Accord and the various COP meetings that have been held over the last 10 plus years. We've really seen, firstly, a top-down mandate. The top-down mandate comes from the fact that almost 198 countries of the world have signed up to a net zero carbon reduction mandate. And that reduction mandate is a target for 2050, with a significant milestone on the journey to 2050 set out for 2030. And that is that many nations of the world need to decarbonize their own countries, their own industries, and ideally on the way, their citizens need to decarbonize. And so we see huge change now around the world. This is in part the rollout of electrification of vehicles. It's a government-backed change of strategy that we're going to see the removal of combustion engines in society by 2035. Certainly in Europe and UK, we won't have vehicles being sold with a combustion engine anymore. And so we're seeing the rise of electric vehicles. We're seeing the rise of hydrogen-based vehicles. So all of this is interconnected to, how do we as a society and as a planet reduce our carbon footprint? And a very big part of that is not only how do we reduce our carbon footprint, but actually how do we remove significant volumes of greenhouse gases that are in our environment today. So decarbonizing is seeking projects that help the removal or the reduction of greenhouse gases. And the voluntary carbon market is seeing all kinds of innovation all around the world really faced into those two topics. How do I remove or reduce greenhouse gas emissions? And so, yeah, it's a pretty important topic. What does that mean? Well, we've seen obviously solar farms, wind farms, building of hydrogen, fuel stations. We're seeing electric charging rolling out, but more importantly, we're seeing, mass scale focus on how we reduce methane greenhouse gases from dairy farming. We're going back over our legacy oil and gas industry. There's a lot of open oil and gas wells around the world that are continuing to emit very large amounts of methane. So there's projects underway to cap those wells, and all the way through to, of course, thinking about how does bio side of the industry play here? How do we restore our peatlands? How do we plant oak trees and other trees to help us remove greenhouse gases from the air? And so those are sequestered resources, removal resources. So you've got a real mix of projects. And therein lies the challenge, which is How do you describe any one project? How do you classify it properly? How do you rate it? And how do you get it to a verified state that when a buyer is buying the removal or reduction credit that comes from that project, how do they know that that is a common unit and that that project will actually deliver for them? And unfortunately, on the journey to here, we've had billions of greenhouse gas tokens, removal tokens, that turned out not to be genuine. And during 2020 to 2023, we had multiple billions that corporate customers had purchased that turned out to not be real. And therefore, there's a big problem in the industry of misrepresenting assets, greenwashing as it's called. And that has led to a lack of confidence in the voluntary carbon credit market itself.
I get completely clearly the standards and integrity points that you've made. Discussing standards is an enormous task, and I only really got to understand it in that one conversation with you. So how do you do it? How does Tokenovate operate in this world?
Yeah, so Tokenovate itself isn't seeking to set standards itself, David. What we've seen over the last 2 to 3 years is, firstly, what happens today is that if you and I were to start a voluntary carbon project today, say we wanted to plant, a few hundred acres of oak trees, or we wanted to build a solar farm, we would tend to kind of sit down and register our company, and we would go ahead and write a summary of what is our project all about. And part of that write-up actually is, well, how long will it take me to build out my solar farm, and how much effectively carbon-based electricity will my solar farm remove from being injected into the national grid? And so it's an offset. So I am producing a green energy. Therefore, it is understood that that is reducing the dependency on carbon-based fossil fuels to produce the same energy. So I have to document, well, how long will it take me to build my project, and per year, what's my expected forecast of removals or reductions in greenhouse gases that I will achieve. And when I describe my project, I have to go and effectively put that document and the spreadsheet that supports it on a registry. And around the world, we have 30, 40 registries that are effectively venues that act as the reviewer of a methodology. They have a methodology to say, okay, are you a legitimate person, Richard? Are you a legitimate business? Have you described your project well over X amount of time? Are your calculations trustworthy? And do you have the skills and resources to actually deliver this project? How believable is it that you will actually deliver? So the carbon registries have got a very important custodian role, if you like, in terms of reviewing these projects against a methodology, a governance framework, and against that, deploying rating skills, assessment skills that will either lead to a disqualification of the project, or it will lead to a verification of the project. And if the project is verified, then it effectively gets its verification certificate and says, yes, this is a good actor. This project is going to do its work. And from there on in, that project will get an annual assessment, and there will be a rating that will overlay to the original verification that says, okay, a little bit like Moody's would rate, our central banks around the world. I might get a AAA rating, or I might get a BB rating, depending on how I'm operationalizing the project. I'm describing that in abstract terms, partly to also try and signal out we're dealing with unstructured data. We've got multiple registries, thousands to millions of different projects, all in slightly different classifications. So the first big challenge we've got here is this is a unstructured data problem. So when we look at this task, we look at, okay, how do we get, a common methodology, ingest process, if you like? How do we bring in this data, run technical techniques to be able to digest the data, assess the language and the descriptions of the projects, the calculus behind the projects, and really run some normalization techniques so that we can stand a chance of automating classification. That's one particular thing Tokenovate has focused on to try and improve the origin integrity of how projects are actually registered. And there's a reason for doing that, because when you're trying to build an upstream common unit that can be traded around the world, you need to have trust in the base origin of the information that feeds that unit. Now, I just introduce here, David, that all of the different registries have had their own different methodologies of assessment. And a number of standards bodies came together late last year, 2023, out of the COP28 conference to start to now bring some top-down standards to the industry. And those standards are frameworks that would challenge the methodologies of each of the registries and say, well, we need to raise standards, and these particular assessments need to be completed in order for a higher standard of credit to be issued. And I welcome this. This is a really good change. This is an important step to try and rebuild trust, rebuild confidence, but also to improve the quality of the assets that are around the world.
And this goes straight back to the standards and integrity of the market point you made before. So really what we're trying to get is a hierarchy to exist where historically probably it didn't. Is that fair?
Yeah, I think so. I don't, well, there were some bad actors, clearly, because we've had significant greenwashing, so we can't sidestep that topic. But on the whole, I think we've got a lot of very good participants that are genuinely trying to solve this very complex problem and put the right type of platforms, technology, processes together. But yeah, I think the approach bodies like the ICDCM have taken recently, which is the Voluntary Carbon Market Integrity Council, they've laid out their 10 core principles, and those 10 core principles are acting as a bit of a golden source right now for how various registries improve their assessment frameworks, improve their methodology assessments. And so in there, we've got things like, yes, good governance over the project. Also, we've got, things like welfare of local communities and looking after local communities. We've got to remember that some of these carbon projects are large tropical forests or large plant lands where there are indigenous populations, and these people need to be protected, looked after, and indeed recompensed for the very large carbon assets that they have been looking after or need to be motivated to continue to look after. And so, this is not just about hard economics. This is also about making sure we do the right social thing for the planet. And some of that is intangible to measure, isn't it, sometimes?
It's perplexing, but I guess it's a problem that's got to be solved. And current awareness is pretty low, I think, still. Am I right?
It is. I think. Well, I guess it depends on what you're doing. For you and I as average citizens, I would say yes, our awareness of what is going on with these standards, these methodologies is pretty low. Obviously, if I'm a large corporation, I'm pretty tuned into this right now because all of this falls in under, ESG reporting. And so around the world, we are now seeing most corporates heading into a situation where they have to do sustainability accounting. That means they are now reporting their own emissions, the emissions that are linked to their supply chains and their ecosystems that they work with for their businesses. And these are all known as scope reporting, so scope 1, 2, and 3 reporting. So if I'm having to do that cost of accounting reporting, I now have a P&L and a balance sheet as an enterprise, as a corporate enterprise, that now has to deal with carbon footprint accounting. And so all of a sudden, I am acutely aware of what my own footprint is and what my supply chains and all of the logistics feeding me means. And that means I have to pay attention to, well, can I reduce my own footprint organically, or do I need to buy carbon credits to offset my footprint where I genuinely can't reduce? So both have to happen. Enterprises have to reduce, but they're permitted to purchase carbon credits on that journey of how they reduce themselves. So the demand is there now. We are seeing buyers looking for high integrity carbon credits to put on their balance sheets, account for them properly, whilst they're undertaking their own removal reduction projects. So if you're in corporate enterprise right now, these standards really matter. You're looking for this market to be a high integrity market.
I hear you. So what does tokenization offer the carbon credit market then?
Yeah, so I think uniquely, voluntary carbon markets is very much an analog business today. Let's say it that way. It's very paper based. It hasn't been digitized. There are certainly no dominant trading systems that have started to run that global market. So actually, this is a perfect market for digital ledger technology and the benefits that that technology brings, which includes tokenization. So if I can take these unstructured data descriptions of projects and bring them through a process where they become more standardized, they meet the methodologies, they meet the principles, and that data can be encapsulated into a project file on a blockchain, I can now create a provenance record and say, well, where is that project in the world? And when was it created? And it's part of the foundation of trust of how I understand the origin of a carbon project. But I can now take that same project file and use that as an inscribing technique to create a digital token. So I can create a tokenized representation of the project. And more importantly, I can fractionalize that project. So if that project is delivering carbon reduction over the next 10 years or 15 years, that operational delivery is known as vintages. I'm delivering carbon removal or carbon reduction on an annual basis. That annual basis is a vintage release. So I can now tokenize each vintage against its deliverable, and therefore that carbon credit can be sold a lot more accurately in tokenized form. So I've got great provenance. I've got great ability to effectively have books and records synchronized for the seller and the buyer. And I can help price discovery, and I can help improve carbon pricing. And that is something that is a problem for the industry. Carbon pricing is highly fragmented around the world.
Yeah.
And is certainly the sell price of a carbon unit is not today covering its cost of production. And we need to see the integrity of these assets improved in order for pricing to go up. And this is before we get into the upcoming challenges of, the European Union introduces carbon taxes in 2026. So if we think we have, a lack of urgency, it's absolutely not true. Between standards, between the rise of carbon accounting rules and the emergence of carbon taxes, there is a real sense of urgency in this industry.
And a real need to save the planet.
Yeah, and that is the bigger need, of course. We're at risk of not hitting some of the 2030 milestones in terms of greenhouse gas net zero emissions. We need to accelerate projects, and we have to be realistic. In order for large scale removal of carbon to happen, we need trade finance to go into those projects. And so this is where we see tokenizing a project, but then representing it through the lens of a digital derivative. So it's a swap product, and we can attract trade finance in, and on the outbound we can deliver the vintages of carbon releases, and you've got the marriage of a very interesting over-the-counter swap derivative in that market. And so all of that needs standards all of the way through the life cycle for that to happen. And so standards at the carbon credit integrity level, but also standards around how does that OTC product actually trade. And to our core business where we work with ISDA, we've done a lot of work on setting out the definitions and some of the specifications for how voluntary carbon credits will trade as derivatives, as digital derivatives in the future.
I mean, the point that gets me, and I don't know how to answer this. I don't know you're going to be able to answer it in this chat, but clearly each ton of carbon credit is different to each other ton. So how do we compare them? How do we think about the differences in type? I understand that you're actually creating, not Tokenovate, but the market is creating these registries that are rating things on a S&P Moody's type AAA, AA, single A basis. Is that going to be the basis to pricing, or what's the thinking?
I think that's a very important topic, particularly through the lens of the buyer right now, because I think the general lot size of the unit for carbon is 1 metric ton of CO2 equivalent. That is the standardized unit. But right now, if I'm a buyer, with the last 3-4 years of reputational damage, my challenge right now is I probably will not commit to just one project when I'm trying to offset my own carbon footprint. So it means I'll go to market to say that I'm going to buy, a percentage of my portfolio will be in biomass, a percentage of my portfolio will be in maybe wind or solar. So I'll end up creating a basket of exposures, and then I'm managing that portfolio because one, I need to know whether those projects will deliver, and I will be the beneficiary of those credits. And so I think for the buyer, this is quite challenging at the moment, and this is where the standards, and this is where, the oversight of how we improve the integrity and the definition of the data sets and the transparency, quite frankly, of those data sets is so important. But, David, we've been around in financial markets long enough to know that there are other strategies here. I'm a big believer that maybe, we will see the rise of carbon warehousing. I think we don't yet have the concept of a carbon warehouse, a bonded warehouse where these different projects can submit their carbon projects to be digitally custodied and therefore warehoused. And then it becomes the warehouse's challenge to design a product that actually a corporate buyer would find more universal. And at the end of the day, these assets do need to be globally accessible and globally liquid assets. And so there's no point in me having a carbon asset that I can only buy in Argentina, or a carbon asset I can only buy in China. We've got resources and activity that are universal, and we need these carbon credits to be available universally. And so I think we're seeing some innovation beginning to appear, but the precursor to that type of innovation, that type of capability, is to improve integrity through standards first. I think when we get over that hurdle, which I do expect to happen this year into next year, then I think we will see the next phase of the market. And that will in turn improve pricing.
I mean, that's interesting because it's an enormous task, this standards piece, but you're seeing it done in the next 12 to 18 months.
Yeah, I think there's enough activity. We've certainly seen the first, major projects coming through the ICDCM 10 core principles just in the last week or so. So that there is a push, and that push comes, top down from World Bank and ISCO and the standards bodies. But there is also a need in the market to solve this problem so that actually buyers can start to get to assets that they need.
That's actually, yet again, you've teed me up nicely, because I'm thinking about, for someone starting a project, how do they find a buyer of their credits? How does that market work? Is that currently 100% OTC now? And is there likely to be some kind of exchange in the way I think of one?
Yes, I think on the whole, it is not 100%, but it's certainly 98.9% OTC. We have seen a number of new trading venues open up around the world. So these are presenting OTC style functionality, where there's some brokerage in-house at the trading venue, but they've also built central limit order books to start to bring a bid offer market together. But largely, we have over-the-counter brokers servicing this industry at the moment, and they are doing a phenomenal job. And price discovery, and indeed project discovery to find high integrity projects, actually the OTC desks are doing a great job at that today. But like many markets in the past, I think carbon could be almost viewed equivalent to the journey of oil. I think when we look back to the 60s, 70s and, crude oil, we've seen the fragmentation or the cracking of oil to generate a whole host of products that all could be hedged and pegged to crude, to Brent. But the reality is that actually we've had a diversity of product strategy, and carbon is almost looking similar to that. We've got an origin carbon unit, but it expresses itself in many different forms. And to date, we don't really have the right benchmarks and the right price discovery tools to service that industry growing properly. So to market tools, what we're looking for in terms of indices, we have a couple of benchmarks, but it's nascent still. I think the journey we've seen other commodity instruments go on, we're right in the early percentile of that journey for carbon, I think.
And we operate in a profit-driven capital market structure. How do those people that are going to build this end up making money along the way, which is effectively what's going to fund the journey?
You're right to raise that question. I think firstly, right now, a lot of carbon projects require working capital, trade finance.
Mm-hmm.
And so, you're seeing a number of big institutions providing that trade finance, and therefore they're able to make a return on providing that finance. I am pleased to say, though, that there are a lot of very major enterprises that are investing in those projects for social governance. And we are seeing a tight coupling to very major institutions actually transforming their own supply chain dependencies by financing projects that are in their supply chain ecosystem. And I don't want to get into naming names on here, but we've certainly seen that in some of these huge, large pharmaceutical companies of the world, where they have complex dependency and complex supply chains. And they are doing a great job of investing in, agriculture-based projects and supply chain innovation projects that are removing significant greenhouse gases in their initiatives. And I think maybe that's a model for other industries, I think, where you can fund something down your supply chain that transforms your carbon footprint, but at the same time really innovates in a local community in a new region. That's looking like a pretty attractive model. But let's also not get away from the fact that we are seeing a shift in energy production around the world. So it's non-surprising that there is some of the very largest oil and gas companies investing in the journey to net zero. And so we are seeing huge solar farms, wind farms, hydrogen plants being built. And of course, these are very capital intensive, but at the end of the day, these are being built so that they are the next generation energy providers.
To close, I was going to say, what does this market look like in 10 years' time? Actually, I'm listening to you and it sounds like 10 years is quite a long way out. If we're going to have the right standards coming in a year to 18 months, how far out are we before we have what looks like a traditionally operating capital market structure in this area?
We're a little further out than I'd want us to be, in all honesty, David. I think, when I talk about urgency, the harsh reality is if we're to hit the 2050 removal objectives, then, we need to be removing 10 gigatons of greenhouse gas a year from now. And it's likely that will have to become 20 gigatons of greenhouse gas as we get towards 2050. So there is, I feel a sense of urgency for the check-in marker. Whilst we've got a timeline check of the 2030 period, which was the 1.5 degree COP28 backed milestone that most nations signed up to, that we must keep the planet temperature down by 1.5 degree. We've already missed that target. We are not removing quickly enough. So the sense of urgency about getting harmonization standards, improving the integrity, having transparency of these projects, these credits, I don't think there's a greater goal for us all. We should be working collaboratively to try and make sure that we are doing everything in our power to get through this journey as quickly as we can. The ramifications are enormous, and I'm certainly not a doom monger, but there is a way for the right organizations to make appropriate amounts of money. But at the end of the day, there is a bigger task here for human society that we should be invested in.
I did like the comment, I can't remember who made it, that voluntary carbon credits should be redefined as verifiable.
Yes, I think that label has probably generated some other problems. And yeah, it wouldn't surprise me if we don't see voluntary get moved over to be verified. But irrelevant to the name, I think the role of those projects that underpin those credits is really, really invaluable. And it's the only way we're going to start to see greenhouse gases really change.
Listen, it's been astonishing as always. By the way, the only reason I can even have this conversation is because of your teaching. Right? So, take some credit.
It's on me. I think that there's so many wonderful people working on this around the world. There's institutions in every university. There's collaborations. I think, if we stand back for a second, it is something to be inspired by. We can often get a little bit disheartened with our news on a daily basis, but in this area, I see some truly incredible work around the world, and there is some phenomenal effort. So this is a place to generate some good energy.
Good energy. Wait, what a way to end. Thanks again, Richard. It's always good to catch up and chat. I look forward to talking to you again soon.
Thanks, David. Appreciate it.